Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. Today I want to talk to you about your credit score and your credit report. Let's take a moment to look at credit checks that happen against your credit rating and your credit report. So there's two types. One is a hard credit check and another is a soft credit check. So credit checks can be thought of as soft or hard inquiries. A soft inquiry, such as when you check your score yourself, or sometimes when you get a quote online, will not affect your credit score. A hard inquiry, however, like applying for a credit card or a mortgage, will have some effect. Typically, a couple of hard inquiries will not raise any flags. It's only if you've been applying for a lot of credit in a short period of time that lenders may become concerned. If you're rate shopping for a mortgage or a car loan, don't worry. Credit bureaus will combine multiple inquiries on car loans and mortgages in a set period of time together because they know you're likely not trying to get 5 mortgages at once. You can also negotiate an increased line of credit with the card issuer, and this will also trigger a credit check. You may assume that because you're already doing business with them, they would base the decision on your account activity alone, and there wouldn't be any need to pull your credit report. But oftentimes, the lender will treat this like a request for a new account, and they will check your credit, and this ends up being a hard inquiry. Just as a note, when applying for new credit or anything that may require a credit report to be sent out, your credit score will be calculated alongside the report. This means that your credit score is calculated and recalculated many times. As you clean up your credit history, this information is mapped out within your credit report, and then your credit report should improve along with the score. Let's talk about getting your credit score. There are lots of companies that will sell you a credit score and a few that will give it to you for free in exchange for putting you on a mailing list for their preferred products. I use Borrowell, which sends me an email every 3 to 4 days with financial products, and once a month they will update me on my credit score. I can also access my credit report on their site at any time along with the score. Let's talk about your credit report now. The company that has your credit score will also have your detailed credit report. As I mentioned, Borrowell lets me look at mine online. I would recommend that every 6 months you get a full credit report from Canada's two credit rating agencies, Equifax and TransUnion. You can get the report from them for free, or actually, it's rather at the cost of a stamp. You have to fill out a one-page form, photocopy some identification documents, which varies from company to company, and you have to mail it in. You can get it as often as you like, however, as long as you don't mind filling out of the forms and paying for the stamp. The free report contains all sorts of detailed information, with the exception of your actual score, even though Equifax and TransUnion will be more than happy to sell the score to you. If you're getting your credit report from another company, that should also contain your actual score that they got from Equifax or TransUnion. So, what information is in a credit report? It contains all the important information about your credit history, and it can be helpful to see it all in the same place. Your credit report contains the following information. Whenever you apply for credit, personal information is updated. If it's been a while since you've applied for credit, this may not be up to date. So you'll be able to see any inquiries about your credit, such as when a potential lender is reviewing your credit. It's important to make sure these inquiries are all done with your permission. You can view any open or closed accounts that appear on your credit report, such as credit cards, installment loans, mortgages, and mobile phone accounts. Your report will also show any accounts that have been sent to collections, whether the balances have been paid or unpaid. Be careful. When an account gets sent to collections, it can have a big impact on your credit score. Any public records you may have will also show on your credit report. An example of this is a court judgment. If you've ever filed for bankruptcy, it will appear on your credit report. So why should you check your credit report? Well, your credit report reveals important information about your financial history and can give you insights into why your credit score is the way it is. A credit report allows you to see any inquiries that have been made about your credit to prevent identity theft, the personal information on your credit file, and information about your trades and accounts all in one place. How do I change or dispute something on my credit report? If you see something that doesn't look quite right on your credit report, please contact Equifax or TransUnion directly and dispute it. You may be wondering, how long does information stay on your credit report? Depending on where in Canada you live, this information can stay on your profile for 6 or 7 years. Some examples. Bankruptcy can stay on your profile for a maximum of 7 years. Negative credit transactions can remain for up to 6 years from the date of your final payment. Negative information from bank accounts can stay on your profile for up to 6 years. Secured loans, such as mortgages and car loans, remain for up to 6 years. Debt collection stays on your profile for up to 6 years from the time the debt is assigned to collections. Legal judgments stay on your profile for up to 6 years. And so, what do I do if there's an error on my credit report? Well, as I mentioned previously, you can contact TransUnion or Equifax directly. For Equifax, the number to call is 1-800-465-7166. In general, if there are errors on your credit report, you should contact the appropriate credit bureau as soon as possible. Any details provided to the credit agency will be reviewed and compared to their documentation. If the problem is not resolved, the agency will contact the consumer to settle any concerns. By reviewing your credit score regularly, you can also protect yourself from potential fraudulent activity. There are agencies which promise to fix your credit scores, and while some of them will help, there are others which will simply challenge everything negative that is on your credit report. That actually does work in some cases because it forces the credit rating agency to get documentation and get proof of the negative items on your credit report. And in a lot of cases, the proof is unavailable, the merchant has gone out of business, changed names, or what have you, and then the credit rating agency has to remove the negative from your report because they cannot prove it. Finally, to round out this extremely long video, let's talk about some myths about credit scores. So, the myth is you only have one official credit score. In fact, there are two credit bureaus in Canada, and each one could collect different information from credit providers and financial institutions. They each also have their own way of calculating the scores they use. Therefore, each of these agencies could have a different credit score for you based on the information that they have and the calculations that they use. What's more, each credit bureau produces different scores for different purposes. For example, a lender who's looking to approve a mortgage may want slightly different information from a lender looking to approve a smaller, shorter term loan. So Equifax has a different score that they produce, as does TransUnion. The second myth is that the higher your income, the better your credit score. Credit scores are based on your credit history and your payment history, not how much money you make or how much you have in your bank account. Credit bureaus actually don't have access to this information, and it does not have any impact on your credit score. The next myth is that carrying a credit card balance increases your score. In fact, creditors and lenders want to see that you manage your credit well. This means that usage is a factor in determining whether you have a high or low risk profile. It is smart to have at least one credit card as a part of your financial strategy, as long as it is being used responsibly. The next myth is that credit utilization doesn't matter. As I mentioned previously, credit utilization is worth 30% of your credit score. Therefore, it is important to maintain and monitor. The next myth is my partner's credit score is good, so mine doesn't matter. In fact, having a good credit score on your own is very important. Much like a driving record is individually based, so is the credit score. And the last myth is that you don't need to monitor your credit score. In fact, Monitoring your credit score can protect you from any fraudulent activity that could potentially damage your report. If you do not monitor your report, you are at risk for these possibilities. The bottom line is there are lots of different factors that impact your credit score. Being aware of why it matters and building good financial habits is a great first step towards a good score. As usual, if you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.